Should I use the word frustrating or should I use the word disappointing? Or maybe both. After the way the benchmark Nifty closed, significantly slipping away from its intraday highs, I think, yes, disappointing for the bulls, frustrating a little bit for the bears as well. Good evening, traders. 13th of December, Monday evening, 8:30 p.m. Indian Standard Time. And we have the Nifty down 112 points, a little over 0.5%. Tests at an intraday high of 17,688. It was a gap up opening, extended pretty well, over 100 points of gains in the morning, but then it slipped. The way it slipped will be a little more clearer from a shortest time frame. This is a 15-minute time frame, just to give you a visual feel of what just happened. Let's go back to the 75-minute time frame. We pay a lot of focus over here, and we had marked these two lines. I think these two lines was marked mainly from the daily time frame, because I was focusing primarily in this zone, the chunk of volumes that I noticed here, and the index was just hovering there, opened up higher today and just completely gave away, creating an outside bar, a higher high, a lower low, confusion, disappointment, and may lead to further weakness. So let's talk about some levels. Now if we go back to the 75-minute time frame, we can see that from a shorter time frame, the trend had turned positive thanks to the recent bounce back. And if I further extend the volume profile from the recent lows, we can see that decent amount of volumes did happen between 17,400, 440 all the way towards 17,550, 560. So this is where we are right now, 17,460, 17,400 odd levels. This is it. If it has to show strength, if it has to bounce back, if the short-term reversal to the uptrend has to sustain and gain further upsides, then it needs to show strength from here. This is it. Any kind of slippage further down below today's low especially will mean further weakness, and further weakness would definitely open up 17,300 and then further lower levels we can discuss later. So 650, 750 range, you remember earlier supports broken. Now it has, at least for today, has clearly proven itself to be a resistance. Generally, and this is like classical technical analysis, generally when a previous well-deserved support later on proves itself as a resistance, generally we are heading for bigger moves. And in this case, the lows are now acting as highs, and so the bigger moves are sadly on the downside. So too early to confirm that, but I would say yes, if we see follow through selling tomorrow or most of this week, then the possibility of 17k or further down opens up. So be careful. Bank Nifty was also doing well, but slipped with the overall markets. The daily time frame is still in a downtrend. The shorter time frame, which is a 75-minute time frame, again same logic I will apply here, that this is it. The index needs to show some strength at 37k for any kind of sustenance on the upside, or else it will probably break further down towards 36k or further down. At this juncture, after today's close, keeping in mind last 4 days, that is last week's Tuesday to Friday's bounce back, nature of the bounce back, today's nature of today's opening and today's slip, considering all these 4 points, I would say that very early signs of bearishness, probability of further weakness has just come in. The prices have just started to show that kind of weakness, and probably Reliance is the best example. Reliance was one stock which after its open continued to stay weak and actually drag the index down. We'll come to that stock a little later, but let's take a look at the sectors. And if I sort them, media was the one that gained a lot, so that came down. Same logic goes with real estate and PSU Bank. So these are the three sectors. These were the three pockets which gained pretty well in the recent bounce back. So the ones which bounced back the max kind of came down the max today. Energy, now this is primarily Reliance, which dragged the index overall markets down. But except IT, which was marginally positive, all sectors over here are in the red in today's trade. If we take a look at the global markets as we record this video, 71 points down SGX, the Dow Jones and S&P 500 US markets are down little above 0.5%. So that might lead to a follow-through weakness in tomorrow's session. Top stocks, if we take a look and sort them in terms of percentage losses, there you go. Reliance was the one. Now this is not a very pretty picture from this heavyweight, the way it had closed today. So is it heading further down? The possibility is high, and if in that case it might overweigh the strength that IT is showing for any further upside. HDFC is also not looking very pretty, neither is the private sector banks, which is the Kotak Bank and the others, HDFC Bank. So these large cap stocks, which add up a lot of weightage to the index, except few names, are not looking that promising. In fact, especially Reliance, HDFC are looking a little fairly weak, and any kind of correction in these kind of stocks can lead to pretty decent correction in the overall market. I don't want to sound too bearish because this is a very tricky, interesting, confusing, frustrating juncture of the market, and last week I was on the move, so I couldn't make any videos. But last week, the way Monday closed and the way Tuesday and Wednesday closed, in just 48 to 72 hours time, things changed dramatically. So let's not make any strong comments or views right now. Let's stay as flexible as possible to the market behavior. But yes, as I said, very early signs of fresh weakness, bearishness has just started to set in once more. I don't like to make predictions at all, because when we make predictions, we emotionally attach ourselves to that prediction and want that prediction to go right. But just a word of caution or just an observation. If you take a look at the weekly chart of Nifty, and if you remember this head and shoulder kind of pattern over there, this one, left shoulder, head, right shoulder, this was the neckline, the prices bounced back. If the index really corrects, means finds itself back to sub 17K, then we are headed for some serious weakness. Okay, so keep that in mind, and keeping that in mind in terms of action would be, don't be in a hurry to pile up stocks as it falls, because who knows, you might find them at significantly lower levels. We have these significantly lower levels marked on the charts. We will start to talk about them if and when they happen. So if and when. Let's scan the markets using the Iris Plus software. I have data till Monday. All right, let's go to the query. Technical query will take us here, and we will load. The load box will open up on the second screen. I'll just quickly drag it. InstaView scanners, Nifty 200, run. Should be done. Small list today. Inside bars, JSW Energy, indeed an inside bar. Kind of consolidating over here. Range contraction is fairly evident for the last 2-3 days. 2 days, in fact. In a downtrend, so any kind of opening up on the downside can trigger fresh weakness. IPCA Lab, small bar, pretty small bar. In fact, it is creating these small bars quite often now. It's not a very strong signal because IPCA Lab is is trendless. There's no strong trend. So JSW on the other hand, I would say better off. Concor is a typical inside bar. Pretty good bounce back, and you can see this previous lows, current highs, they kind of confluence. So yeah, drop below today's low can lead to some weakness. And then we have Indigo. This is also very, very similar story over here. Previous lows, current highs, very small bar. You can call this hanging man. This was not a very good looking shooting star. It has pretty decent lower shadow. So this can be a nice hanging man. So below today's low for Indigo, Concor and JSW. Bullish bearish Harami pattern, UPL, it cannot be a bullish Harami pattern because it's in an uptrend. Oberoi real estate. The baby candles range has gone outside the mother candles range. So not the best of pattern. And IPCA Lab also cannot be a bearish because it's in a downtrend. So neither of this bullish bearish Harami pattern makes any sense in today's scan. Delivery percentage, we would like to see stocks which have got delivered more than 1 lakh shares today, and 70 to 100% delivery percentages within the Nifty 200. And let's process this, and we've got some names. Adani Green's been frequent in this list. You can see the percentages over the last 10 days, 70, 80, 88, 80, 72. So not bad considering the stock is at an all-time high. It's at strong highs are getting some real good strong high delivery percentage numbers. Crompton, now I'm going to change this chart to weekly and daily both. I'm going to toggle between them just to see if they are close to any medium to long term supports, because when a stock of a decent quality corrects and is hitting medium to long term supports, and at that point of time delivery percentage spikes up, it's typical sign of accumulation. So Crompton can be one of them. HDFC I wouldn't, because HDFC anyways is an institution favorite. Delivery percentage tends to be higher for HDFC. Hindustan Unilever, yes, this is a quality stock, this is a quality support, and completely beaten down. We can see how deeply oversold RSI has been for few months now. So Hindustan Unilever is not a bad investment idea, wherein you'll need a lot of patience because the stock is completely dead. ICICI GI, not the best of friends, but yeah, similar kind of story. If you take a look at the weekly charts, supports kicking in, delivery percentage just have started to pick up a little bit. Infosys also falls in the same category like HDFC, tends to find pretty decent delivery percentage often. Procter & Gamble, then we have Sanofi. Sanofi needs probably is on the verge of further weakness, not the best candidate. And then we have TCS, again similar candidate, Infosys and HDFC. So I think Crompton, Hindustan Unilever, ICICI GI stands out in this list, from this list. Breakout on the upside is very, very unlikely because probably we'll find most of the stocks slipping significantly. Page Industries looks interesting, high priced counter. Coromandel, not really. Bajaj Holding, not really. JSW Energy and Godrej Properties and Indian Hotel, no. Godrej Properties, who is that? This is like a dark cloud cover, but no, I'm not going to chase breakouts in this market for sure, because don't want to get stuck, trapped in a breakout failure. ITC is an Oracle short, looks interesting for a short intraday fall below today's low. And then there's Laurus Labs. ITC, Laurus Labs both looks decent as Oracle short. So not too much ideas, and the quality of the stocks also was not that great. I think this is the time where we should continue to trade on both the sides, especially on the short side, considering the way the market gave us clear indication of fresh weakness. Whether it's a bear trap or a bull trap, whether what kind of traps it is going to turn out, because last Monday was a trap, this Monday is going to be a trap. Last Monday the break of recent lows led the longs to exit and it bounced back, and did today gap up opening led the shorts to exit and then it fell? Highly possible. That's exactly how the market disappoints the both sides, the bulls and the bears. But strategically, I would suggest keep an unbiased long short both, because as I said, you never know, in just 48 hours things can change dramatically. But most of the elements, most of the technical rationale and parameters at today's close, and keeping in mind those 4 points, is suggesting further weakness, right? So if the market falls another 100, 200 points, that should not be a surprise. On the other hand, after falling just 50, 60 points, if it bounces back 400, 500 points, that's a pretty encouraging surprise. So that's my take on the markets. Trade well, take care of yourselves. Try to trade less. These are not the best of times to make money. I think decent time to conserve and save whatever profits you've made recently, if at all. All right. Thank you for listening to me, and trade well, trade wise.